What's up, guys? Welcome back to Everyday Money. Now, the people that have been here for a while, that are subscribed to my channel, that watch this channel quite a bit, they know that I love total market index funds, especially VTSAX from Vanguard, or VTI, which is the ETF equivalent of VTSAX, as my core investments for just general wealth building. Those are the ones where you can just stick your money in there, fire and forget it, and it will essentially track what the market does on any given day, month, year, or whatever. And I've done several videos on this about how I've doubled my money by investing and using VTSAX, the differences between VTSAX and VTI. And I've talked a lot in generalities about the average market returns of 10% historical returns in the market and how that should track with VTSAX and any other total market fund. And while that's fun and all, what I like to do today is talk about my actual returns in VTSAX and how that has helped me grow my wealth and how it can help you grow your wealth in real life. Because right now, my VTSAX account is sitting right at around $88,000, $89,000, something like that. And, you know, if we would just go on historical norms and say 10%, I would get about $8,800 of returns per year. And that would end up being about $733 or so a month if, you know, we just look at average historical returns. And for most folks, especially, you know, the average person out there making the average wage, $733 a month is probably pretty good. And I would be pretty happy with that off of $88,000. But what I want to do is take a look in my Vanguard account, my actual account, and see the actual returns that I am getting and not just the mathematical returns. Because historically, 10% is the number, but in the last 10 to 15 years, you know, we're looking somewhere in the low teens. And in this last year or so, we have had just a crazy run on stocks, and it has done quite a bit better than that. So let's look at my actual returns and, you know, kind of get out of this theoretical, mathematical mumbo jumbo and look at what the actual stuff is. Okay, so this screen should be familiar with anyone that watched my how I doubled my money with VTSAX video. But this is my total performance in Vanguard's VTSAX from March of 2019 up until almost the end of April 2021. And as you can see here, the rate of return has been 23.9% over that period of time. I have made investments of $59,815.30, of which $35,000 of that was my initial investment into VTSAX. And I have returned $28,475.64 over that time period. And on this graph here, you can see how that goes up over time, and that's, you know, all good and what have you, but it really doesn't paint the picture of the every month return and essentially income that I'm able to get off of this core investment that I've made to kind of be just like the baseline of all of my investments. But the funny thing is here, you can clearly see where the coronavirus shutdowns started in the only area in this entire chart where it goes into the red. So what I want to do is I'm going to switch over to table view, where we're going to get a much better look at the monthly returns that I'm getting from Vanguard VTSAX. So let's go ahead and switch over to table mode here, and you're going to get a much better look individually by year on what I've been doing as far as investing. Now, I opened this account, like I said, in March 2019 with money that I had gotten from the sale of a personal residence that I was going to use for a down payment on my new residence that I purchased, but I was able to do a 0% down loan by using gift equity because I was buying my in-laws home. And that is a great way, if you're interested in buying your parents or your in-laws home, to essentially do 20% down. So there's no PMI, there's no crazy interest rates or anything like that. They are able to gift you the equity, and you are able to do a 80% loan to value loan, but also put zero down. And I'll have that in a future video if you guys want to see that. Leave that in the comments if you guys are interested in seeing that. I know that's kind of a niche purchasing thing, but it's very powerful if you can use it, because I was able to take that $35,000 and invest it along with another 100 or so into there. In that month, so that month I gained $1,117.71. And that is broken down into market gain and loss and income returns. And what that is basically is market gain and loss. That is the value of the shares in this fund going up and down as far as like growth goes. And then income returns are the dividends paid out by all of these companies in this total market fund. The dividend ratio on this fund is not great, because this is, again, every single company in the United States. So a lot of these are growth companies that are not paying out dividends. But as you can see, over the course of time, the market gains and losses, or market gains, typically are going up in size. And that is because through the end of 2019 and then all the way through 2020, with the exception of the major coronavirus panic, right when lockdowns started, there have been just crazy returns in the market. I think that my 1 year return on this fund is something like 62%, and that is just not possibly sustainable. I don't think it could be sustainable, but it's just not likely that that is going to continue. So up through 2019, you know, the gains that we were making per month in this account are somewhere around $1,000. You see $900. Some of these ones, like here in November, 1664. December, about $1,000. And then we hit the coronavirus lockdowns. And even though I kept investing money in, and now what I want to emphasize is that while I was investing money as the market was going down, I was buying more and more shares for the same amount of dollars going into the account, which is my purchases over here. And I was actually putting in less purchases, investing less, because we had our kids in private school at the time before the lockdowns, and so I was paying out a lot of money to do that. During the coronavirus lockdowns, the original panic, in those 2 months, my account lost over $10,000, just over $10,000. And for the only time in my investing in VTSAX did my cumulative returns go into the negative. And that means that I had physically lost, on paper, money in this investment. And again, if I would have sold that at that time, I would have locked in that loss and lost. But I just continued to invest in, because I have a very long-term strategy for this particular investment. And I just kept pumping money in there. And you can see in April here, we made a $5,248.33 gain. The next month, $24.83. The next month after that, $11.33. And in that, right there in that time frame, I about made up my losses from. I did make up my losses from the coronavirus initial pandemic scare thing going on. And then, as you can see from the market gain and loss column here, things have just been going gangbusters since. Some notable things here is, like in December of 2020, a $3,000 total gain, including value and dividends. Here in March of 2021, you can see that this big purchase number, this 3622, that is stimulus money that I just jammed right into investment accounts. And, you know, we made total that month $2,715.36. You can see so far for the month of April, total investment returns of $4,623.94. And now my market average historically should be $733. And so we got the better part of $5,000 that month. So I think that is a pretty powerful investment return on what initially started out is $35,000, and we have just under $60,000 of our personal money invested for an account balance of about $88,290. So that is the behind the scenes, and I think that shows you that at least lately in the last 10 to 15 years, the markets are doing much better than 10%. If you're concerned about inflation, having your money in assets like these can help you hedge against inflation, because as the prices of everything goes up, the prices of the market should go up in concert with that. Same thing with real estate. Having money in real estate, the prices of those should go up, as we have seen the prices of real estate go up quite dramatically. Although I am supposed to be getting $733 a month from the average returns in the market for a total market fund, as you can see on the screen, I have been just trouncing those investment returns. And I think that this is a pretty decent example for most reasonable people out there that don't have millions invested in the market. And if you do have millions invested in the market, congratulations, because you are doing fabulous if this is an investment that you're in. If you guys don't have millions in the markets, if you only have 10 or 12,000 or even 5,000, or you're just getting started, this, I hope, is a way for you to get motivated and get that money into the markets to work for you. Because, right now, I am making several times what I should be making in the markets. And that's not to say that's going to go on forever. That's not to say that in the next, 2 years we could have a giant crash. In history, the markets have always gone up over time. And even when crashes and corrections and pullbacks happen, the markets still always have exceeded all of those that have ever happened in history. Guys, if you liked this video and it gave you some value, and hopefully it gives you some motivation to get your money in the markets and working for you, be sure to hit that thumbs up button for me. That really helps me out in the YouTube algorithm. If you haven't subscribed to this channel yet, be sure to subscribe to grow your wealth, increase your success, and put you on the road to financial freedom. I appreciate you guys watching, and I'll see you next time. And I always have trouble with saying success in that thing. I don't know why, but that's for me to work on, I guess.